welcome back to another video. If you're new to the channel here, my name is Brandon, and in today's video we are going over some pain, we're going over some ugliness, we're going over my tax-free savings account. And as you can tell probably from the title of this video, no way to sugarcoat it, we are getting crushed. It is a sea of red. This is my exact portfolio that you're looking at. Aside from this, the holdings, you got about $10,000, $11,000 in cash. For those of you that are on Questrade, if you're not already like using this view, I would highly suggest going back to this. But we're going to be going over this today. How do we handle this? What's going on? Like, am I doing something wrong? Is there, did I make a mistake? How am I approaching this? I'm actually very fortunate. I'm happy that I'm building up my portfolio at a time like this. I think it's such a good teaching point. And I'll tell you guys, am I worried in the slightest? I don't want to spoil the video, but no, we've been here before. This is exactly what to expect as an investor, and this is nothing out of the ordinary. I will just say before we get into things, if you guys are not already using Inverse, you guys absolutely should be. I'm actually going to pin this thing to the thing somehow here. I know I've done it before. Float on the top. There you go. Now I can adjust things. But thank you to Inverse for sponsoring today's video. Maybe if I was using Inverse for my research, I probably wouldn't be down so much. I'm just kidding. That's not the case. The whole market is down, and I just did a full review on Inverse platform. If you guys are not familiar with it, awesome free tool that I'd highly suggest you guys checking out. It is completely free to use. It's going to be free going forward. You can look up all sorts of different stocks. In fact, I want to actually start today's video off with this little example here. And I basically picked up the stock. I picked the stock Royal Bank, okay? And why Royal Bank? Well, I don't own Royal Bank, but I own TD, but I think this is basically going to give us a very similar picture. I just picked a time frame, and for educational and teaching purposes, there was a period of time back in about 2014, 2015, where for about a year, or at least a matter of months, Royal Bank stock came from about $62 per share down to $52. And I don't know the exact math on that. I didn't take the time to calculate it, but you guys can leave a comment down below. What is that? A 10% drop, 15% drop, something in that ballpark? I think something in that ballpark, but basically, based on sheer luck, based on sheer timing, you had a great stock like Royal Bank and it was down 10, 15% just in a matter of months, matter of 8 months or so, right? It happens. Well, I want to go back to my portfolio here and just go for a little overview. Basically, if you guys don't know the background of this, the only two stocks that I've held for quite some time, which unfortunately are the real losers in this account, are of course Baba and Tencent. I've done a million videos on my opinion on those stocks, and I plan to hold them longer term despite the poor performance. And clearly we've taken some significant losses thus far. But all of these other positions are quite new. Like, I've added to these stocks really over the past couple of months, just as I've been rebuilding up my portfolio. And I truly do believe that there are forces in the stock market that are sometimes beyond your control, like what's happening out there, the economy, the sentiment out there is really something that we can't always pinpoint as investors. And sometimes over the short term, over a matter of months, or even over a matter of a year or two, we absolutely cannot control what happens in the market. We can control how we react as investors, and I'll tell you what I'm planning on doing very soon. But just to go back to our example of Royal Bank, which again is, I compare that to my TD holding, right? I could have used TD here. Point being is that during this period of time where your shares dropped X%, if we were to just zoom out, look at a longer term chart, this is kind of where we were looking at. And again, in the time when you're kind of in the moment, a drop like this can feel quite maybe scary and maybe a cause for panic. But when we are able to see the bigger picture, when you are an investor who truly understands investing for the long term and not investing over a matter of months or even a matter of a year or two, I mean, this has been a very clear picture where today Royal Bank trades up at about $130 to $140 per share, right? 2x your return over about a 5 to 7 year period. Kind of what you'd actually expect. Typically, I believe stocks, you can receive about 100% return over a 7-year period, at least if you're using the rule of 72, I believe it is. Something like that. But basically, again, it's just such a short-term, short-sighted mindset. And if you want to look at where we are today in the markets, I mean, clearly we have had this tremendous run. S&P is down about 8% off highs. NASDAQ is down about 18% off highs. Well, of course, our stocks are all going to be down, and that's like just the nature of it. The market goes up, the market goes down. We are in one of those times where the market went down, and that should not deter you from investing if you are a long-term investor. In fact, this red like that I'm seeing right here, it does not even concern me. And I know that may sound hard to believe, because as an investor, you may kind of see this and be like, wow, this is not what I was anticipating. This is not fun. But this is not the first time I've built up a portfolio. In fact, I've built up many portfolios over my years. multiple for myself and multiple working at my father's firm, where we built up client portfolios significantly larger than this. We're not talking 20, 30, 40, $50,000. We're talking $1 million plus portfolios. And when you see drops like this in $1 million plus portfolio, I'll tell you, it does hit kind of differently. Like, it kind of hits you a little bit harder when the dollar figures that you're seeing are, the drops are in the tens of thousands, even sometimes bigger than that, right? I'll share with you a quick story. Like, one of the most eye-opening moments for me when I was kind of shadowing my father as a portfolio manager. If you're not familiar with what he does, he managed portfolios, equity portfolios, basically built them up of all individual holdings for his different various clients. And one day, like when I was relatively new, he built up an account for a client, million plus portfolio, like quite a bit of money, invested into the markets. And a month or so, I looked at the client's account, like, which I did. I was basically working with my dad on the portfolios and just observing. And I remember seeing one of the positions down like 15%, right? Like a month later, shares had dropped 15%. And I asked my dad, I'm like, uh-oh, Dad, like, are they going to be upset? Like, did you make a mistake? Maybe you shouldn't have bought that stock, because again, some of them have gone up, some of them gone down. I'm like, this is just, hey, 15% on a position of that size. I mean, that's tens of thousands of dollars, potentially even more, that the position was down in. And I said, well, geez, they're not going to be too happy about this. And the way my dad handled that, like, just opened a door for me that I will never ever close. It just opened a new way of thinking, because what my dad ended up saying, and something that I now preach on the channel, is the fact that that stock had dropped 10, 15% only meant that that stock just got 10 to 15% cheaper. And in fact, what happened was that he ended up going in and buying more of those shares. Again, this was back maybe 5, 6, 7 years ago. I guarantee you that position is significantly higher today than it was back in the moment. But in the moment, it can definitely feel a little bit scary. The caveat to that is you have to be sure that you are holding good quality companies. Now, in my opinion, you can feel free to agree or disagree. And again, let's put Baba and Tencent aside, because everyone has very, very strong opinions on that, either for or against, and many people against, and that's totally fine if you don't agree with me. But let's take a look at some of the other holdings, such as Adobe, right? A stock that I actually believe is significantly undervalued even at today's prices. BlackRock, one of the newer stocks that I added just a couple days ago, again, down 2%. That means nothing to me. Canadian National Railway. You fast forward 10 years from now, and you ask me the question, is Canadian National Railway going to be higher than it is today? I'd bet good money on it. In fact, more than just this amount that I have in this stock. I'd bet good money that's the case. Facebook's a stock that, again, does have variance of opinions, but I do think we are looking at an attractive price right now. Google, I could say a very similar story. Again, Tencent, I believe that's the case. TD Bank, there is no question in my mind that that's going to be the case looking 10 years out. And then Williams-Sonoma, again, looking at the numbers that I am looking at based on my research, I strongly believe this is going to be a very strong grower over the years. And these short-term drops, the drops that we have experienced over a week or 2 weeks or a month, these literally mean nothing to me. And I'll actually just toggle over to my TD RRSP, and I don't know why it breaks it up. I have a Canadian dollar account and a US dollar account, but if you take a look at this account, this is our Canadian dollar account, and for some reason Apple's in here, and I've tried to move it out, but Apple stays in there. But here's a good example of just when you hold the stocks for longer periods of time, and my RSP I've obviously had longer than my TFSA because I'm just rebuilding my TFSA. But here we have basically every position in the green aside from our bond fund. And our bond funds obviously are all going to go down, like in an environment like this. In my opinion, they serve a role, and I don't have all too much in this bond fund. I only have about $2,000 in there. So again, could even consider that cash, but on the capital appreciation side, bond fund is down, but all of our equities have done well. And again, this is what is going to happen when you own good quality companies for the long term. Here I have Apple, Brookfield, Rogers, Couche-Tard, TD Bank. If we go over to my US RSP, which does happen to be a little bit bigger, you're going to notice a very similar story. Green, 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 green. You do have a couple stocks in the red here. This is actually a newer stock for me, Tyler Technologies, like literally this month. So again, it's going to be down with the market. Starbucks was another newer position that I was adding to, like literally within the month. So it's been dragged down by this recent downturn. And then these two are, this is basically just a little junky stock. And then Tencent again, unfortunately. But why I show you guys this is, first of all, hope you guys enjoy the insight into my portfolio, kind of see what I've built myself up of. This is basically what you're looking at. And again, if you guys want to follow along, like if you didn't know, our investing academy is now $19.99 a month. And not only do you get 100 plus hours of training, you literally get every single trade call. You get every single portfolio. So if you want to know what I'm buying, when I'm buying, not just to copy, but just as a role model, someone to maybe give you some extra set of eyes and ideas, well, that's just one of the many features, which is that first link down below. But case in point that I want to show you guys this is these stocks that are all in the green now, at some points, absolutely, like there's a very good likelihood that at some point during building up my portfolio or portfolios for clients, there are periods when it looks like this. And it's how we handle that as an investor that will actually dictate what happens in the future. Again, it's really not rocket science that if you are selecting good companies, like companies that you firmly believe in 10, 15 years out are going to be significantly higher than they are, the fact that these shares have come down, there is not like a single hint of concern, right? I'll give you a good example. Like when I look at my TD account here, which is the RSP, and I look at a company like SoFi, right? SoFi is just a junk stock. You see there's barely any money in there. What is there? I put $1,000 in. Today is worth basically half of that. This is a company where I would say the confidence level is not there. Like this is a fun little speculative position. And the fact that this stock is down 50%, that may be a cause for concern where I'm just like, you know what? This stock may never ever come back because they're at such an early phase and there's so many variables at play that this stock may never pan out. Hence why there's only $500 or $1,000 that I put into this position. But when you look at all of the other holdings in my name that I've screened, that I've vetted, stocks that I am comfortable holding for the long run, these are stocks that I have no question 10 years down the road. And hey, maybe not every stock. Like let me backtrack for a second. Maybe not every single stock on this list. To hit 100% of our stocks out there is a little bit foolish. I think it's a fallacy to think that's going to be the case. But 80%, 90% of the companies that I've selected here, I'd bet good money that these stocks do very, very well over the long term. And hey, maybe like over the short term, I mean, do I expect we've hit a bottom? I'm never one to try and pick or time the bottom. I'm just going to keep buying stocks when I see value. And trust me, if these stocks drop lower, I will be adding more and more money. Like I will just continue adding. I do think that the markets have just been shaky and I've been not really adding all too much to stocks, like other than starting to build these initial positions. That's actually another funny thing. If you guys are still listening, I don't know if you guys saw that video where I talked about how I plan to build up my TFSA, right? And I gave a bunch of stock ideas. Well, this is how the TFSA is looking so far, and it's probably very, very different than what I talked about. Maybe not very different, but a little bit different. I've definitely identified new ideas that weren't on that initial video, and as mentioned there, like that's the fun part about investing, right? That is the fun part about investing, is kind of not winging it, but taking it as you go and adapting, kind of finessing and whatnot. But nevertheless, like these are stocks that I will just, as a young investor, as someone with multiple decades, like I like seeing red. I like seeing my stocks down because I can add more money. I can deploy more money and buy cheaper shares. One thing I would just say, like just in terms of the broader market, is like I'm not like rushing out to go plug money into the market right now because of all the uncertainty, because of, I mean, again, I don't want to like speculate, but you see the Netflix numbers declining. You see some of these companies reporting earnings, and clearly the market's already off 20% off highs. I've been saying it for months now. If you've been following the channel, like I feel like we are literally starting a recession. I feel like we're in a recession, or at least on the brink of it, whether we want to like actually categorize it as that or not. I've been seeing all sorts of signs over the past number of months, like basically coming out of the COVID pandemic. We had a nice boost, a nice injection into our world. Everything was good for a little bit of time. Well, I feel like we're really feeling the effects of everything. The supply chain issues, the pandemic, like it's kind of a delayed effect, but I feel like that is here now. And again, you never really want to go bottom fishing as an investor, which is not what I'm kind of saying I'm doing. I'm just saying I'm not like rushing in to deploy money. That said, when I see stocks that I like add a value, I will add to them. The fact that Adobe is down 8%, like off the time that I bought it, I was still very pleased with my Adobe purchase right here about a month ago, or whatever the case was. I like this stock where it's trading at today for the long haul. And I could go down list by list. I could go down stock by stock and say the exact same things. The prices that I'm paying today, I am okay with, I am happy with. So what happens over the following months does not matter to me. And that's personally how I approach my TFSA, being absolutely slaughtered, absolutely crushed. I don't know if you guys are in a similar position, and hopefully this video is, in a way, like a little bit like eye-opening to those who maybe are new investors. I can totally understand if you're a new investor and you're seeing this, like this is probably not what you signed up for. It doesn't look pretty, and it doesn't look like fun. And again, I think it's just a simple shift of your perception, like a change in the way you think, to tell yourself that this does not matter. This is irrelevant. Like, I had no intentions of buying a stock and selling it a month from now, or buying a stock and realizing my gains or losses 2 months from now or 6 months from now. Like, I am a long-term investor thinking literally decades out. And what happens today, what happens tomorrow does not impact me. But that's the video for today, guys. I really hope you enjoy it. I hope you appreciate the insights, sharing this type of stuff. It's not easy to talk about it when your portfolio is down. I mean, for some people, maybe it is, maybe it isn't. For me, it's not. This is part of investing. Like, this is literally like, there's nothing out of the ordinary that's happening here. Like, with the timing that I'm building up this portfolio, with the types of companies I'm buying, there is nothing out of the ordinary that is happening here. This is just par for the course when it comes to investing. And I can totally understand how for a new investor, you may not understand that. But for any experienced investors, you can feel free to chime in below. Let me know what's happening with your portfolio. Let me know if you've been here before. Again, my message to you guys is just think long-term. Always think long-term and disconnect yourself from what's happening over the month, the 3 months, the year. Because at the end of the day, it's irrelevant, and all it does is give you better opportunities to purchase stocks at a cheaper price, assuming they're good quality stocks. But if you guys enjoyed, take a moment, give this video a thumbs up, subscribe, and as I mentioned, our Investing Academy is down below, $19.99, and you get all types of courses and training, a community to chat with, trade calls, follow along with my portfolio, keep up to date with the stocks that I am buying. I know you're probably thinking, why would I follow this guy's stocks right now? But I'd encourage you to come back in a number of years, and maybe we'll have that similar discussion and see if there's a change in your perception. But thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.